This is the Leadership in Insurance podcast, brought to you by FinPro Search Partners.
Insurance companies are businesses and they need to look for the long term and be sustainable.
We went from 0 to 1 and now it's going from 1 to 100.
Insurance as a concept, as a kind of service, is brilliant. The execution is what we're looking at now.
I think the companies that are going to succeed are the ones that are going to understand and master the art of intent.
When we talk about innovation, we lean too heavily to think about technology, and we don't think about creating a culture of innovation.
I think innovation is essentially continuous improvement of existing processes and platforms and product.
Right? It's got to be easy. It's got to be seamless. Hello and welcome to the Leadership in Insurance podcast. I'm your host, Alex Bond, and I'm really lucky this time because it's always nice when people come back to be joined by Will Ross from Federato. Will, thank you for joining me. I know you've just literally stepped off a plane. So how are you? Let's start there.
Doing very well, Alex. I'm fired up to be here. It's been an incredible week. I was out in the Bay Area with three of our product teams in our board meeting, and it's great to be back home and great to be talking to you.
Good stuff. Thank you. Well, look, you have been here before, but it feels like forever ago. I mean, and it probably
when was
was.
it? I don't know.
I think it was 3 years ago at least, I think. So
Okay.
really, really early, I think, in the process. So why don't we start there? Because, you've been very active, obviously lots of kind of successes and raises and all those things that's kept you in the press. Also putting slightly dangerous stickers on the pavements in London, which we joked about when I saw you at ITC in London. But for those people that have been hiding under a rock, don't know Federato, don't know you, great if you could introduce yourself and the Federato business.
Yeah, sure. So I'm Will Ross. I'm the co-founder and CEO of Federato. Federato is an AI native core platform, and our focus is really on spanning the entire policy lifecycle. So that means we're delivering technology with a broad set of capabilities across underwriting, policy administration, claims, billing, and we do so really with a focus on how can AI change the way insurance work actually gets done. I think pretty famously, we're known for being quite unapologetic when it comes to the legacy old core and the limitations that places on what I think insurance leaders see as an obvious opportunity for transformation. And so company's been around since 2020, and has always been very much at the bleeding edge of where these technologies are going, but with a pure focus on P&C general insurance.
That origin has always really been interesting to me as well, because outside coming into insurance, kind of, you and your co-founder Will, what did you see happening that convinced you to have this like truly AI native approach? Why was that required rather than kind of layering AI on top? Because obviously that's an alternative to this.
Yeah, look, I mean, William and I are both AI researchers, right? So we met as graduate students at Stanford University doing AI research. So the likelihood of us starting something that wasn't quote unquote AI native was quite low. The story ends up being more why P&C insurance. And, coming out of the prior decade of deep learning, largely what we call supervised learning, people remember labeling these huge data sets and things like computer vision and natural language processing, very different than the LLMs we're interacting with today. William and I had a bit of a shared thesis. And that thesis was that in business-to-business software, B2B software, or B2B AI, a lot of the companies that had struggled in that era had looked at a business process and said, how can I take a human out? And what we were a lot more interested in was, how can I find a very high value human who just has an unfair job? Because it turns out these technologies are probabilistic. And so if instead you think about a human with a very unfair job where they actually just aren't equipped to do that job well, and instead you think about, if I could hit a pause button on time, how might they do that job differently? If they could do that job differently, or if I could approximate them doing that job differently using some sort of AI model, would that still be, even though it wasn't perfect, 10x better than how they do it today? And so we were looking for a problem with that shape. Interestingly, I was doing a completely unrelated piece of research in climate and atmospheric, specifically in wildfire modeling. And through that, we got to know the insurance industry. And what we saw was the underwriter, who has a very unfair job, If we're being real, the job we ask of an underwriter in terms of maintaining an entire portfolio while measuring them on throughput is a very unfair job. And we saw an incredible opportunity to bring these technologies to bear. Now, that has continued to evolve beyond our own imaginations, but at its core, that idea that the insurance portfolio is all that matters and that risk selection is a bit of an unfair job for the average underwriter sitting at their desk has always been what interested us.
Yeah, do you think that's where the conversation has evolved around AI? Because I think when we track technology changes as part of the job, and that's part of my role is either a recruitment professional or, quote unquote journalist. I got called a journalist the other week. I was very pleased with myself. But the evolution of the conversation that I've noticed is away from cost cutting. I think that was always how it's introduced, to save time. So to maybe just giving people tools to do more, maximize the output. But it seems that that was your thesis from the beginning. But have you noticed that that seems to be the drift of the conversation? And maybe has that changed the conversations you now have with potential clients?
Yeah, look, I think it's a natural drift for our collective perspective here in insurance. I don't think that's the drift of the conversation overall. If we step back at the tech industry, there's this common thing that tends to happen, which is the technology industry overly serves itself. And let's contrast technology with insurance for a second. In a software company like ours, headcount generally recommends between or represents between, call it 70 and 90% of expense. Contrast that with insurance, where it's typically less than 10% of expense, right? Often, 4 to 5% of expense, right in line with technology budgets. Well, what that means is automating people out of an insurance business doesn't move the needle much, right? And so I think we're seeing that rhetoric in insurance as people are recognizing, oh, just taking people out of a process in insurance, I might take a little bit out of my operating expense. But there's far more to disrupt when it comes to improving loss costs in the form of risk selection, when it comes to attacking traditional distribution channels, attacking traditional reinsurance and capacity markets. And so these technologies can sort of reorganize the capital stack of an insurer, right? Thoughtfully deployed. And we consider ourselves a pioneer in that, but we are thrilled. We have seen more and more companies thinking this way, and I think it's good for the industry. So we're all for that.
Yeah, I agree. I agree. And the thinking changing is, yeah, it's a sort of changing tide that we're aware of, but it's really gathered momentum, which is the thing that we're kind of really conscious of. You touched on this earlier, I've always loved your messaging around this, Will, which is that you've explicitly positioned yourself against like old core legacy insurance technology. What do you think it means for the kind of the underwriter at their desk today, and how badly is it actually constraining, profitable growth?
Mhm. Yeah, well, so first let's talk about what the old core is and why we talk about it.
Yeah.
When we talk about the old core, what we're really referring to is a group of about 8 companies that make out a large share of technology wallet for insurers today. On average, they're 36 years old. 7 of the 8 are backed by traditional private equity, meaning not a lot of real R&D going into those companies. And cumulatively, those 8 companies have acquired over 90 companies. What that means is the underlying bedrock of technology at most insurance organizations is an extraordinarily fragmented bubblegum and duct tape patchwork of not one company, often, many companies rolled up into one company, that isn't a terribly great position to serve. Now, to your question, what does that result in for the end user? I go back and I think about one of the most infamous of the old core, started as a claims product in, I believe, 2001. But they launched their policy administration product for the first time in 2006. And it's really interesting to look back because when they launched it, it was today we're launching policy product and it will solve the problems of underwriting. And then in 2016, they acquired a company and said, we have become a dominant force in policy administration. And today we are acquiring a company to solve underwriting. And then just last year, they launched underwriting product. 2026, 2025, another 10 years, we are launching this product to solve underwriting. And I think one of the things that has continued to be true as these companies have built themselves up, and as I mentioned, acquired various technologies, is they've really actually struggled to serve the end user. There's often this sort of sentiment of no one gets fired for buying the old core. I've met countless people who have been fired for buying the old core, right?
Yeah,
There's this sentiment that there has really been no tangible ROI from these technologies. And so people see AI, they see opportunity. It's obvious, it's intuitive to the most senior leaders in these companies. And they're looking for what do they need to do to make that progress. The unfortunate thing, and what Federato is really focused on making sure they have a chance to hear, is you will not be able to leave all of your legacy old core in place and make the AI transformation you want to, because there are actual technical inefficiencies in how AI interplays with that generation of systems. And so that's really, it's really a painful experience for people today. But I think equally important, it's holding people back from what they know should be the experience of the future.
yeah, yeah. I mean, that's the common problem we talk about, and I do see this patchwork quilt approach, which doesn't seem to be serving everyone. I have huge empathy for the tech teams of, because there was always this sort of ignorance of the early stage of insurtech, and probably even before we spoke, probably 5 years ago when you were starting out, there was a lot of kind of new entrants to the market and saying, "Oh, these people are stupid. They don't get it. They've got all these bad systems." And I'm going, "Oh, they know." But they're also constrained by regulation and just
There,
honestly
there is
the change
there's a
management of
pent
business.
up like desire for change. There are a lot of people
Mm,
working really hard. One of my favorite things to talk about is everyone likes to make this like, oh, I stumbled into the insurance industry thing, right? It's sort of
yeah,
trite when people bring it
yeah,
up.
yeah,
My favorite question is, why did you stay?
yeah, yeah, yeah.
People care about this industry. They
Hmm.
feel like they're working on something that is sort of a very basic good that helps whole economies kind of function. And it's hard, right? It's a bit of a masochist endeavor, right? And it's not always the most systematized, et cetera. But where people genuinely believe and see the opportunity to make it better, they're very, very interested. And I think Federato has been well served by just being honest and not saying, I am the band-aid you can slap on a festering flesh wound and solve all your problems. No, Federato shows up and says, you're going to have to get out your knife and cut. And you don't need to amputate, but if you're not willing to do that, we won't actually work with you, right? And the reason for that is in the earliest days of the company, we would have tried such a thing, of course, right? And we learned the very hard way that there are true technological limitations to what you can do in and around the old core. And our market reception has been much stronger where we've been very clear and very honest and very forthright that no, we are here to move the old core out and unblock your progress towards what you know intuitively is possible with these technologies.
And that for me draws that distinction that I see in the market where, we work with a huge amount of technology companies in the insurtech space. I mean, that's the job, finding them talent. Um, and I get sort of uncomfortable and slightly nervous about between a true technology business, which Federato would include in that, because it's the mantra of what you've just said, rather than just essentially being a service provider going, we've got this core technology, but we'll adjust everything to the client's needs. And I'm not talking about implementation and making it work for the client, but like essentially evolving to the whim. I say, oh, we don't want to change that bit, but needing the message really to be, you're going to have to make cuts. You're going to have to adjust. You're going to have to really think about how dramatic this change needs to be to really kind of make the use of this technology. And it's the thing I see in growing companies. Everyone does it. I started my business, and we're insurtech specific, but did we stray on the boundaries when we're trying to make revenue? Of course you do. And then you stick to your core, and you realize that's actually your true value add. So yeah, I think that sort of true staying away from being a service provider, which you can be if you end up kind of evolving everything just to suit the whims of the client. Um, I think it'd be a miss of me not to talk about the Series D fundraise. Obviously, we raised $100 million in November. Huge round, particularly in the kind of environment. Got on some really big investors. Goldman Sachs leading the round. Huge amount of funding. It's a massive vote of confidence. I'm intrigued about conversations between Goldman Sachs in this space because they've made some investments, but not as prominent, not as much as in other sectors. Wonder what that conversation was like, and what does that raise allow you to do? Because it was in quick succession from a raise 12 months before.
That's right. In fact, and we had also raised 12 months before that.
Mm.
Federato's been fortunate to be growing a multiple of itself year over year, which as you get further and further into it, you realize, Alex, that what that means is doing as much business this year as you've done in the entire history of the company previously, right? And so it's a pretty compelling and interesting journey. Critically, though, the Goldman round was really about something we saw in the market, which was a desire for a new independent player that could compete with those 8 companies who are the old core, right? When we sat down with the likes of Goldman Sachs, they're the sort of firm who's in the position to really understand, in their position as investment bankers, right, how the acquisition market works, how these 90 acquisitions had ended up in these 8 companies, how those companies had then been taken private, how these private equity sponsors then bleed a number of these companies dry. Not saying all of them, but certainly some. And as we sort of had that conversation, what we were articulating to them is, look, we don't need the money, right? We had very barely at that point tapped into our Series C, right? But we looked at it and we said, by going out and raising this amount of capital, right, doing it as a true minority investment, which sends a clear signal in the market of the success we've had, right? But equally true, doing a sizable amount, frankly, much more than we likely need to be successful with this business.
Mhm.
The signal we are able to send to larger carriers is that Federato is here for the long term. Saying it bluntly, in raising that round, Federato made itself unacquirable to the existing incumbents in all but a very downside scenario. If we were to just fail, of course, never say never. And obviously, a lot of people working really hard to make sure that doesn't happen. But this puts us in a position to sit down with CEOs, CFOs, CUOs, COOs at insurance companies and say, we are here for the long term. We are the thing the old core has feared for a long time. We're 2 founders with longevity ahead of us, right? Deep understanding of our market, a very differentiated product, a very differentiated offer in terms of the business model and delivery model, right? And we've been successful in beating every single one of those players head to head in major core system transformations, right? And so we sat down with Goldman and of course others and said, this is what we think we want to go do. As we saw, the options were, sell now or go try and win the gold medal, right?
Mm.
Go try and build something that would actually last a while. And for my co-founder and I, there's so many people who start a company and their life's goal is to flip it to one of the old core or a large incumbent in their respective industry. And that's what this round was about, was sending a clear signal to the market that we are here, right, for the long term as an independent player to compete with the old core. And I can tell you the old core knows that.
I love that. I mean, my investment thesis as an angel investor is to always invest in things that I think will get bought by the incumbents. I mean, that's the way I play the game, man.
And
Because I think,
that's
yeah,
okay. That's a
yeah,
great outcome for a lot of people. Were we to sell the company in the last few years, lots of people who worked hard with us and for us would have had fabulous outcomes. But
yeah.
as we looked at those people and we talked to many of the employees who'd been with us the longest and said, hey, there are these options. Now it's ultimately, not a decision that gets made on a purely democratic vote, but we
Mm,
looked at it and we said, what do we believe these people want us to go do? What do we want to
mm,
go do? What do the existing investors want us to go do? And
mm,
everyone agrees that there's an opportunity, right, to go build a generational company here. And it's easy to say those things when you're a Series A company or a seed company, et cetera. But as you said, many people are in the background really just underwriting the small strategic exit. You know, what should scare the heck out of the old core is that William and I and our team, our core team who've been with us a long time, are willing to lose in the pursuit of doing
mm,
the right thing for the industry. And when we
mm,
say that to customers, that furthers our success. That is what the industry has been waiting for. There is this pent-up desire for change. And people do not believe that the existing old core vendors are going to be the ones who create that change for them. And so it's really put Federato in a one-of-one position in the industry right now. It's a position of privilege. It's one we take with a great deal of sort of understanding and responsibility. But that's really the core and the root of why I do that. It's not about the whiz bang flash, look how great we are, sort of ZERPy fundraise announcement. It's about we're here, we're serious, and we're doing the right thing for the industry with our partners, our customers over the long term.
Yeah, I think it's a really important point. I mean, it's something that I came from very traditional insurance search. Well, I used to work for a carrier, as you know, and then I worked in the sort of very traditional search space. Now, most of my clients were listed companies, etc. And the striking difference when I came into sort of venture-backed or PE-backed startup and scale-ups was the realization that this is actually the only place that true change can come from. Too many people have a vested interest in status quo, whether that's leadership, or the risk, the downside risk for someone kind of making those changes as a C-suite leader is huge. And the wins are kind of potentially improbable. But the culture of startup and scale up, the culture of a Federato is to make brave and bold choices because that's what it was from the outset. So it's almost an unfair race because you've got this cultural win, I always think, which is to make those big bold decisions.
Yeah, and it's worth talking about for a second. Let's really look at the history of insurance technology, at least software in insurance.
Mm,
The term policy administration dates back to a company started in 1980 called Policy Management Systems Corporation. Okay. Policy Management Systems Corporation, their original corporate charter, stated that they built software or technology systems and there were four gerunds: underwriting, claims, billing, and policy management or administration. That's very interesting because then in 2000, what happened? You're talking about the era of the web. Okay. So about 20 years later, the era of the web sees a new entrant in claims, a new entrant in billing, a new entrant in rating. These become the big three players of the last 20 years, three of those core members of the old core. And what happens? I mentioned one of them, the one that started in claims in 2001, goes into policy administration in 2006. And in doing so says, we are here to solve the problem of underwriting. It's a very interesting evolution where what you start to realize is these systems, going back to the 1980s, really never existed in siloed categories. The vision was always for them to exist together. There have just
mm,
been different entrants, and especially the dichotomy of underwriting and policy administration is a bit of a false dichotomy. I've never seen a policy admin system that didn't market itself as improving underwriting.
mm.
And I would argue that buying an underwriting system and then trying to integrate it to some sort of thin core or skinny pass or these ridiculous terms in the industry underlying it, first of all, that's a whole lot of technical risk. Integration is hard. It's the hardest part always. But second, it's basically admitting that your policy administration project failed because I guarantee you every one of those business cases said that it was going to improve their underwriting process. And so it begs the question, why are you keeping something around that was a failure for you and then taking on an extremely risky endeavor and bringing that on? And so back to this generational step, it makes intuitive sense to me that here in 2020, where we have another massive technology trend like the web, which is one consumers, which senior executives at insurance companies are consumers, actually see. They are using ChatGPT at work and in their daily lives. It makes sense to me that there would be another evolution. It also makes sense to me that there wasn't in the 2010s with the cloud. It is very hard to sit with an insurance executive and explain the cloud. What is the cloud going to get me? If you sit there and you show them what they intuitively expect to see in terms of what they believe from their own personal use AI should get them, these people aren't fools. And they want what's best for the industry. There is this pent-up desire for change. And so, you think about these sort of 20-year iterations. In many other sectors, perhaps these evolutions happen on a 10 or 15-year time frame. Ours happens to be 20 to 25. But it makes a lot of sense to us right now in this moment that there's going to be this change away from the old core, or sometimes people like to call them the new legacy. To me, calling a technology company that's 25 years old new anything sounds a little crazy. It's very clearly the legacy, but we do still have a couple 30-plus-year-old systems hanging out, right? But the fact that the old core is still marketing themselves as replacing legacy, I mean, you are the legacy, right? Like let's get
Yeah.
off it for a second. Um, but it's time for change, and the industry knows that. The industry knows that. We It's not controversial what we're saying, right?
No.
There's always been questions of, well, can Federato deliver it? But through time we have, right? And we will
Yeah.
continue to, and the proof will always be in the pudding, and we recognize that. But we're not afraid to say what everyone's thinking.
Yeah, I love that. I love that, and I suppose I've always loved our conversations. We're almost at time, Will, and I think to follow that conversation forward, because there's nothing I disagree with what you're saying. I mean, I remember having conversations a couple of years ago about one of the core systems provider launching their cloud-based product. And I was like, what do you mean? And also that shouldn't be news. I would like do that under the radar almost, just to roll it out. But what does I want to talk about what good looks like. You've obviously been very successful in converting clients. You've got customers, and you've built that over this window that you've been in this huge period of growth, and the vote of confidence and the raise is evidence of that alone. But I wondered if there's a specific client story that really illustrates what transformation can look like on the ground. Obviously, as much as you can share.
Yeah, no, look, there's a lot of different stories to tell, but one of my favorite to speak to is the work that we've done with two organizations. One acquired the other. So first with Velocity Risk, which was a tier one property underwriter, and then Ryan Specialty as a whole, as they were acquired into Ryan Specialty, and we sort of expanded our footprint within that organization. The reason I love telling that story is because it's a series of journeys. You really see the maturity of their adoption of our platform from them. And they've always, lived into their name, which is velocity. They're always looking for speed and efficiency and what they can do. And yet in the process, they've still achieved what we started this whole conversation out with, which is actually improving underwriting risk selection. So just to give, a high level example, given a submission volume of, let's say, 100 submissions, right? I don't want to give away their true numbers, but given a submission volume of 100 submissions, they used to only get to, let's say, 50 of them, right? Interestingly, once they had implemented Federato, they actually only had underwriters spending time on 40 and change. So they actually got to fewer. Why does that make sense? Because AI got to all 50 and made sure that underwriters only spent time on the 40 and change, right? That actually made sense, all right? Meanwhile, out of those, what percentage actually got quoted? Out of the same submission volume, they were able to increase their quote volume 2.2x, 120%. This world is full of crap marketing about 5% here, 10% here, 20% here. And where that's genuinely the improvement we make, we will say that. But the reality is 2.2x. I think that's pretty significant. What becomes even more important is those quotes were getting out very quickly. Now, I mentioned they were spending time on fewer submissions, but what's interesting is they also reduced their time to quote by 89%. And they did that within 90 days of launching. Now, reducing time to quote by 89% and touching fewer submissions can be true because what it allows for is focus, right? We're getting them in, we're getting them focused. And then lastly, as you talk about actual risk selection, you can kind of think about all the ultimately bound policies, right? Let's say out of those 100 submissions, 10 ultimately end up bound. What percentage of those meet their internal definition of what they believe will be most profitable? Truly high appetite, not just in appetite, high appetite. Let's say historically it was 1. Okay. It was less than 20%. We see less than 20% across the industry. Okay. We were able to, at first, and you will have seen these numbers evolve in our marketing over time. I can't actually remember the stat off the top of my head. I think it was like 3.6 or 3.7x that percentage. So we took it from 1 of 10 to 4 of 10. That
Wow.
number's now gone up to 5.5. So we've taken them from out of the 10 submissions they bind out of 100 possible submissions, we've taken them from 1 high appetite out of the 10 to 6 high appetite out of the 10. What that does for the profitability of an insurance company, and remember, they're also 2.2xing their quote volume, meaningfully increasing their number of bounds, improving their hit ratio within that, and reducing time to quote 89%. I mean, this is a radically different business that has gone through a huge period of growth, profitable growth in working with these technologies. And it's those sorts of results and the continued evolution in working with those partners that's just extraordinarily exciting. And so I tell that story. It's been one that's been public for a long time because it continues to evolve. It continues to get better. I'll be down with them next week. We're speaking at CPCU to a group of young underwriters. I'm really excited to do that with them and the Commissioner of Insurance for the state of Tennessee. But then we'll be sitting down and talking about how do we go faster? How do we do more? And those are the customers who really are pushing the edge of this stuff. And there are many more behind them doing just as remarkable things. So it's an exciting time.
Well, thanks for sharing that because I think it's always in the data. It's always in the kind of like, yeah, it sounds great, and that's the only way to tackle the skepticism. Is like it's not just great, it's provable. And that's, I mean, you're a scientist. I don't need to teach you about proof. Well, it's been a pleasure to revisit this. I know your schedule's been crazy, so I really appreciate you jumping off a plane and getting on this podcast. Love watching the business from afar. You've just hired one of my very good friends in the market as well, so she's enjoying her time with you as well. So I just want to thank you once again for being a guest on the Leadership in Insurance podcast.
Thank you, Alex. Really appreciate the time.
Thanks, Will.